Should we anticipate this sort of volatility into a key date like January 10th, when indeed we all feel the SEC has to make some view on a couple of ETFs and therefore maybe all of the ETFs?
You know what? It's an interesting question about time. If we were talking about this a year or two ago, we'd be wondering whether an ETF would ever be approved. Now we're talking about when will it be approved. So we're a lot closer to a very important moment in cryptocurrency's history. The when it's going to happen isn't really that important. We know that it will happen. We know that BlackRock has a very great track record in getting their ETF applications approved. So there's not really much worry about it getting approved at this point. The when is going to be something that markets are going to look at, and it's going to cause a little bit of volatility. And for traders, that's great. They want volatility. For the long-term investors who want to actually buy the ETF, they're going to just hang on a little bit. That's all.
Fadi, Caroline and I always say on this program, Bitcoin is our risk asset of choice, and sometimes it moves in close correlation with equities, sometimes it doesn't. But you do note that there is some volatility in selling in markets broadly, particularly on higher or stretch valuation tech stocks. How much of this is just going into the new year, new markets, fresh perspective?
You know, you mentioned NASDAQ, and if we were looking at this again a couple of years ago, we're going to say that Bitcoin's now trading again like a tech stock. And actually, if you look at on a weekly basis, the correlation with the S&P 500 is at its highest since May 2023. So the correlations are still there, but Bitcoin isn't going drastically down as we've seen with the NASDAQ over the past couple of days into the new year. So Bitcoin's actually doing quite well, even if it's seen a little bit of volatility today on the back of some not so vetted news.
Yeah, I think I know what you're referencing. And Fadi, I would say this to our audience. This is less than scientific, but I've seen posts on X, other blogs, that make the argument that actually Bitcoin currently is not pricing in a roadmap for approval on Bitcoin ETF. Are you able to make that argument that the price of Bitcoin, even the surge of recent weeks, could not reflect that potential outcome?
I think we're still at a state of a little bit of gambling in crypto markets. There's still a lot of leverage in the system. If you look at potential cash and carry trades, if someone wants to take a near risk-free return, you're looking at 15, 20%. But the reality is for that you to take advantage of that, you need to buy the spot market, put it in under custody, trade it on global markets, and take advantage of that yield. The reality is, what happens when these liquidations occur is that people will have to go back in, buy more Bitcoin, and do the same process all over again. So it's sort of the self-fulfilling cycle, especially when we go into a positive cycle with Bitcoin. It feeds off each other, and it does the same when we go in a negative cycle. That's all.
There's been this sort of flurry of activity, an awful lot of box ticking needed to be done with the SEC. Think of companies talking about their authorized participants that are involved to be able to create, redeem the shares within the ETF. You've got, of course, a bit of a rush for people to have overall the clear language that the SEC is wanting to see as well when it comes to cash-only creation. So if we don't get all the box ticking necessary, and if the SEC doesn't want to make a kingmaker out of just one or two ETFs, and we do hold out, and we don't see something by January the 10th, will we fade this rally? Do we have to fade this rally?
We could see Bitcoin drop as well. Yes, it's not inconceivable to see that Bitcoin can drop to 37,000. A lot of analysts that look outside the traditional markets and they look at the blockchain activity are arguing that we could see a correction to 37,000, maybe lower. If you ask me, if I look at sort of a revision to the mean, you could even argue that it could go to 27,000. But ultimately, when we're talking about the ETF approval, we're talking about long-term investors who are going to come because they don't want to manage the security of their digital assets. And so at that point, it's a completely different argument. It's inevitably going to go up. So the idea that an ETF is going to either make or break Bitcoin in the next 6 months is a little bit wrong. We need to look at who the ETF is really going to be addressing as a market, rather than investors and traders who thrive on the volatility that we're seeing today.
Yeah, and using future strategies and have been doing that for a few years when their liquidity is there, Fadi. I'm interested as to, therefore, have you quantified what sort of scale of money you think will come in as and when a spot Bitcoin ETF is approved? What sort of inflows are you anticipating?
I don't really have a number for you, to be honest with you. I think it's a narrative that cryptocurrency markets have really sort of latched onto as something positive, as a catalyst after a couple of years of really difficult things happening within the market. But what is really going to happen is that we're going to see larger investors understand that buying a Bitcoin ETF is going to be a lot more expensive than actually taking custody of their own assets. And the opportunities on a 24/7 day, round the clock, round the year markets are going to be a lot more lucrative than buying something that's traded on a US-based exchange only, or any sort of exchange traded products that's sort of locked into traditional hours. We're entering a very different financial market infrastructure, and I think Bitcoin is the start of investors understanding that digital assets offer a lot more interesting opportunities.
Fadi, your analysis is referenced in the main Bitcoin story on the Bloomberg terminal, Bloomberg.com this morning. You're listed as head of research, but Copper is a crypto custodian. So I went down the rabbit hole. Coinbase is also a crypto custodian. Explain the competition in that market and what it is.
I think we're addressing very different markets. So Coinbase is a crypto custodian, but I think it also addresses a much more retail-focused audience, and it's done great. I don't think the crypto industry would actually be where we're at without the initiative that Coinbase has put forward. Digital asset custodians, such as Copper, are focused more on financial market infrastructure and real-world digital assets, and removing and mitigating the counterparty risks that we've seen on exchanges, perhaps not Coinbase, on other exchanges that are not so reputable, that have been hacked. Whereas investors would use Copper to mitigate their counterparty risk and still be able to trade on all these exchanges. I think that's the main difference between companies such as Copper, who's focused primarily on financial market infrastructure and custody and being able to provide the tools, and Coinbase, which has a much more not retail-focused, primarily a retail-focused outfit, but it's just a different kind of offering to the clients.